Good morning and welcome to pre-market report for Monday 8th August 2022. Now, before we delve into the pre-market video, let's look at the international news front. There's been only two major news. The first is related to the US jobs data, as it saw a massive spike in June of 528,000 jobs. The second relates to China, as the trade surplus for July improved as it reached $101.3 billion. This is as the exports rose by $333 billion in June, which was a record high. So this both are positive news. However, the jobs data is negative news for the American markets. Now, when we do look at the American indexes, we see that they're hovering exactly where we left them last week. This is the daily chart. Yes, it is the daily chart, and we can see the Dow Jones is hanging on my quant resistance level, and it's not able to have a further rise above it. So basically, if today it does not manage to have a sharp rise, it will be a 7 trading session in which it will not have been able to break above this quant resistance level and have a clean rise. The same can be said about the S&P 500, as it's in the same dilemma, only it is basically completely below it in most of the trading sessions within this box range. So the quant resistance level is working well, and if it basically breaks its 50-day moving average on the 3 and 4 hour chart today, then the American indexes will have a downward pullback, which I believe is the need of the hour. This is as the markets right now do need a cooling off period. Now, when we come on our local indexes front, we see the same scenario as the American index is playing out. As last week on Thursday, Friday, I had even shared on Twitter the 38,250 was a major resistance level for Banknifty, and we can see that resistance level has held itself from when I gave clients on 2nd August to when I basically shared it I gave clients on Wednesday, and on Thursday and Friday I shared it also on social media. So it has managed to keep the indexes at bay for the whole period, and they have not been able to have a breakout. So unless the Bank Nifty were to cross this zone, do not consider any longs. The positive sign for the Bank Nifty, the 20-day moving average, the daily chart, has just crossed over the 200-day moving average. So that is a positive. However, those who have been watching my pre-market videos for long enough know my rule that when 20 crosses 200 in the daily chart, what does occur in it. Now, when it comes to the Nifty, basically 17,410 was the resistance level which I had been giving clients, and which I had also shared on social media. Obviously, the above resistance levels above that which I had given, but this is the one which I had shared on social media also, and we can see how it is handling the Nifty, as it has just not been able to have a clean break above it, and we begin to see how it does. Now, for today's trading session, I believe people should follow Bank Nifty step first. This is, it has got the more bullish setup on the daily chart. So if this one starts to falter, the Nifty will come down very fast with it, because the Nifty right now is the weaker link, and the Bank Nifty is a stronger link. So if the Bank Nifty's weakness does develop into further confirmation of price action, then that will make the Nifty's fall come a safer shot than the Bank Nifty shot. So basically, that is how I would play the trading scenario as of now. Thank you for watching, and do like the video and subscribe to the channel.